Time for opening bell on May 19th. Let's get started. Risk disclaimer, we know there's risk in trading. Please don't always use trade capital only. You know the deal there. If you're following me on social media, this is the best place to find me. Mondays and Fridays for the Pulver Report live during opening bell at 9:30 a.m. Eastern Time. YouTube.com/Chris Pulver, the channel. Check it out. Check out the Trading 101 video series. And then verified accounts on Twitter at Real Chris Pulver. Try to keep the handle consistent. Instagram, Facebook, etc. at Real Chris Pulver. All right, let's jump to the charts. I'll get logged into YouTube. Say hi to everybody. Good morning. Good morning. Say hello in the chat. Let's go. Markets. Moving on, some optimism that the debt ceiling will be resolved earlier than the June 1 to June 5th deadline. So we'll see how that goes. But clearly the markets are up all week. Morning, Chris. Morning, David. Good morning, Gary. What's up, Gary? Nice to see everybody. Happy Friday. Happy Friday. All right, so for the week, let me go to the weekly candles here. The Qs, that's a big candle. Yes, that's a big candle. Well, bigger than what we have seen. So we have seen, and again, the week is not done, not until closing bell today. But for the most part, we're up around 3.93%. That's a pretty big candle for this week, considering, like I said, 1, 2, 3, 4, 5, 6. We've had about 6 weeks of indecision, so things have felt a little sluggish, a little lame, if you will. But here we are looking at a decent melt up. And again, just so we're pretty clear, this is being led by the biggest companies in the world. So essentially your top 10 stocks. This includes Meta, Google. Netflix had a huge day yesterday because about 5 million of their 100+ million subscribers decided they'd take a discount for their Netflix membership and say, yeah, I'll take ads. So 5 million people signed up for ad revenue, and Netflix stock jumped 9%. So market's just throwing money at stuff, but we're up 4% for the week essentially on the Qs. The SPY is up to this 420 level, which resistance is right there. We gapped a little bit higher. Really interested to see how we close today, and as we get into the final full week, so just keep this in mind, full week of trading next week, and then Memorial Day going into the holiday break or a shortened trading week, we have our debt ceiling that could be as early as June 1, possibly into June 5th. Again, market's trying to get some optimism. Now, keep in mind that the market likes to price things in. So if we actually do lift the debt ceiling, the market's kind of already moved ahead of it. So I'm not saying there's not more upside, but I wouldn't be surprised if it's buy the rumor, sell the fact. And the fact is we raise the debt ceiling, the market's already made the move, and we actually sell off because of it. Debt ceiling raise is going to print somewhere between 1 trillion and 1.5 trillion of new debt for the U.S. That certainly might change the movement here. One thing that's been interesting this week is we have seen a weekly bullish candle on the dollar index. We've also seen risk appetite in the stock market. Usually that is not a consistent correlation. Usually it's one moves and the other does not, or moves the opposite way. So if dollar strength, I was suspecting some stock market weakness, and we didn't have that. Dollar's been up, so gold and silver have been down. Here's gold to the downside. Here's silver to the downside. Here's Bitcoin to the downside off the 31,000 support, or resistance rather, and just shy of 27,000 on Bitcoin. Ethereum, same thing, off the highs around 2,100, trading around 1816. We have some levels. I'm curious to see if we connect the lows, if we have a trend line support or channel support. I could do that here. I'll just use my charts. So I'll take this trend line out of the way and see if we get a channel like so. So connect the lows, connect the highs, something like that. So if we have some channel support around 1700, 1695, obviously I'm looking for, accumulation levels if we come back and retest, and this is resistance, and this area is support, looking to buy low, buy low, buy low, just kind of range trade Ethereum, range trade Bitcoin. Let's see here. Expirations this week for equities on demand. We have a few. We have some that are in full profit this week. EXEL actually about $1 ahead of our strikes. We had a 19 by 18. That's going to be in full profit. We closed out for profit on NCLH this week. That was a 14 by 13. We had SHY. Actually, no. DOG we closed for profit. Sorry, that was an inverse Dow. That was early in the week. We closed out for a about a 25 to 30 cent net profit. We might actually have some of our other expirations do pretty well. We had some early assignments by brokers. I had a 70 by 65 on USO that was assigned early. Was able to shave off about 25 cents on the risk. Ended up taking a small loss in this one. KDP, I just had notification I was assigned overnight. This is not a bad spot to own some shares. So as long as I have this protected, I like this spot. Past resistance becoming support. This is consumer defensive, low beta. We're trading around 32. And I think what I'll end up doing is keeping some shares if I can, maybe keeping 100 to 200 shares in this in one of my personal accounts, and then looking for some protection to the downside. Buy that protection out to the end of the year, maybe into January, in case we have a big correction. But let me take a quick look at the sector. So let's go Spider sector. I'm looking for sector tracker. I should have a bookmark here. SPDR. Well, whatever. I'll find it. I swear, Yahoo's surge is so bad. How do they still have Yahoo Finance? Spider sector tracker. See, that's what I'm looking for. Right there. All right, so tools, sector tracker, year to date. Again, communication services, you think like, oh man, I thought tech was leading the way. Well, tech is pretty darn close. Between technology and communication services, those are your largest companies. Those are your mega caps. If you go into the holdings, take a look at this. 25%. This is ridiculous, right? 25% of communication services is literally Meta. Then you've got another 14 for Google, another 12.2 for Google, right? Alphabet, A and C. It's literally three companies that make up nearly half. Nearly half of this sector is made up by two companies. So stupid. But that's what happens. All right, so that's why communication services like, oh, that's weird. I didn't think they would do that well. Well, it's two companies. And then you go into technology. What's leading technology? NVIDIA, okay, at 5% weight. Advanced micro devices. This is semiconductor plays, right? Salesforce, that's a bigger one than I thought. Oh, Apple just sneaking in here at 23.5%. Here's your big ones. Microsoft at 25%, Apple at 23%, Nvidia at 5%. Your big three. It's you have the biggest companies in the world that really aren't reporting fantastic revenue and earnings, but yet it's enough to get the market to lift, and they're kind of the moats, right? They've got the competitive advantage. They have it's, I mean, for lack of a better phrase, too big to fail tech, and tons and tons and tons of forced buying going into those stocks. It's easy large cap rotation, right? So crazy stuff, but it's just funny how so few companies are dragging everything with it. If we go to something like FinViz, look at the heat map. There's a lot of advancing. I know it's opening bell now, but I'd be curious to see this week versus last week, or the last 2 days versus before. Most stocks possibly advancing. I was hoping I'd catch a heat map from yesterday, but maybe it's in my stock twits. But there you go. Stocks rise on deal hopes as traders await Powell. Markets wrap. That's this morning. Okay. S&P rises. Wall Street aims for a winning week. Right. So melt up continues, led by basically 5 companies, 10 companies, and it is what it is. So long story short, taking assignment on KDP. Probably will keep some shares, buy some puts to the downside just to be protective of the shares that I own, and then also look for this thing to be range bound. If we hold this level, I like this past resistance becoming support. We hold here around 32, go back up to 40 by the end of the year. I wonder how slow the summer is going to be. We'll take a look. With the stock market up, we're going to see some yields retreating. So if we go to the 1 month, the US 1 month off the highs a little bit. We were peaking up here. This is a daily chart. So around 5.7 down to 5.42. The 3 month, which I have a bunch of rolls in my Roth IRA here, 5.16 on the 3 month. We go to the 1 year. The 1 year is up 5.07. So anybody interested in some CDs? Anybody interested in some Treasury bills at 1 month? It's not bad at 5.07. That kind of helps alleviate some of that aggressive auto investing, right? If you're, I got a 1 month, I got a 3 month. Well, you have to auto invest that, every 1 month or 3 month to get those higher yields and save you, 0.3 to 0.4% for the year. But anyway, short term is certainly leading the way. The U.S. 2-year at 4.33, again up, and 10-year is up. So we're still leading like a 0.5% inverted yield curve. Yields are up, bonds are down, and part of that's also because we see the stock market rally, right? So stock market's up, that means our bonds are actually down. So IEF is dropping. That's the 7 to 10-year. SHY is the 1 to 3-year. That is down. I'm not done watching these. I mean, if we see these reset, this is good space for the stock market to go higher, melt up, and bonds to take a bit of a back seat. But it's interesting how those short-term yields are just rallying so hard. And then TLT is our 20-year. This one's also back down to some equal lows, but I'm looking to see if we have a double bottom around 93. Okay. Here we go. Good morning, Catherine. Good morning, Donna. How are you? Nice to see everybody. Let's see here. Been killing it in futures, getting close to passing a $50,000 funded account. Awesome. Awesome. I love to hear that. Let me check and see how the robots have done today. Get rid of this. Currency strength chart. Yeah, I'm just going to load up some robots real quick. So my Perfect Storm Pro, how did it do for the week? It is up 203 pips for the week. Perfect Storm, the original. Perfect Storm. Let's see. 405 pips for the week. My Pockets Pattern Pro, up 403 for the week. And my Equalizer, let's check and see how that hedge strategy was working. Equalizer, then the buy only. So up 518, while the sell side was down about 758 this week. So working through. We had I mean, for Forex, we kind of had a one-directional week, so I can see how one side struggled. 518 on the plus side, 758 on the downside. Net positive on the week for robots, 403. Let me just add this up. Let's go here. So we're going 203. Oops. 203, that's Perfect Storm Pro. 405, Perfect Storm. Pockets Pattern Pro, 403. Buy side was minus 758. And plus side was 518. 518. So 771 net on the week for robots. And then I have I'm gonna set up another setting for my Masterflex prop. That's for a currency strength read. So it's gonna look like this. Anything that's beyond 40 for strength, beyond 40 for weakness, taking a trade. So today's best trade would have been New Zealand dollar. That would have been New Zealand dollar long, and that would have been activated. So this was up above 40. Let's see when the dollar gets below 40. 27.32. We get a 40 right there. So right around 5:55 a.m., there's a little upside potential on New Zealand and a little weakness in the dollar. So that would have been the way to filter out this market and get one trade for the day. New Zealand dollar long. Pretty nice way to filter out 28 currency pairs. And yeah, I think, I don't know. I will talk about this today in class. I have a 1 p.m. class for Masterflex, but 40's been my number. I might bump this down to 35 or 30 and just go after the faster wins. I think that having, if we're going after 10 to 15 to 20 pips, I think getting a 30 to 35 strength and weakness breakout could be pretty solid. 40's been fine, but our volatility's been probably medium at best. We've had some JPY volatility, here and there, but for the most part, the baskets of a whole have been pretty contained. So anyway, we'll talk about that today in class, and I'm going to make some adjustments to that one to go after some shorter term pips and try to bang out some 10 to 15 pip wins. Any charts you'd like me to take a look at today? So bonds are down, yields are up. Currency-wise, we're getting some risk on with the New Zealand and the Aussie. Dollars off. DXY has been up for the week, though. And again, stock market's been melting up higher, and it looks like we have some momentum here, right? So I mean, this yellow box to me is solid resistance. You know, it is a Friday. There could be some profit taking today. We'll see. But for the bulk of the week, it's been, the last 2 days especially, Wednesday, Thursday, pretty strong bullish days to push up here. I still think this 420 to 425 resistance zone is really solid. I mean, that's basically the high from 2022. Obviously we could take it out and the market can move and it doesn't make sense. Like, well, they're going to raise. Well, yeah, I mean, the U.S. might raise debt, right? Raise $1 trillion, raise $1.5 trillion. Does that tank the stock market? I don't know. I don't know. I mean, if it does, we'll be ready for it. If it doesn't, it's a melt up and we enjoy the profits, because that would pretty much lift everything. So we did take some stabs at the markets. I'd have some bear calls, through May and June, on the SPY and on the Qs. We also have some straddles that are directionally neutral that are playing out really well. Nvidia's one in particular, right? We were looking for straddles in here. It's obviously to the bullish side. We straddle the Qs to the bullish side. We straddle XOM to the downside. You see all these lines on here. Basically, I was setting up trades where this was my indirect or my indecision, and we were looking to go above or below, right? So now that it's down here, we have our bear call spread that's in profit, ended up walking away with 50 to 60 cents net profit. So we have a lot of those trades going on this year, just because I wasn't real keen on overall direction. So I played some direction neutral plays with good premiums. That's one thing I've been really disappointed on the last couple of weeks is, trying to get some decent premiums on our option trading. We looked at the IWM yesterday. I was going like $7 or $8 in the money and getting not even 50 cents for it. That was pathetic. But then you go bear side, and we were getting like 65 to 70 cents on the dollar. So really skewed implied volatility right now in premiums. So I'm hoping that changes and becomes a little bit more efficient and fair, because it's kind of garbage to go in the money and not get paid proper value. So anyway, we took a trade on Beyond Meat yesterday. Did a long call around $10 and looking for some long. Well, we're giving it time. We're going out to like January of next year, looking to see if this will finish higher. Our break even is going to be around 13 bucks. If it finishes at 17, 18, 19, we get a squeeze up here to 20 plus, then that call is going to be in good shape. Okay. Okay. So again, any charts you'd like to take a look at, we want to look at currencies, any stocks. So we have some expirations today to manage for equities on demand. We'll take care of that in class. We're taking some early assignments and small losses. That's no big deal. We're being patient. For the most part, the last 2 days have been green across the board, so that's a good thing. And looking at a couple of new strategies to test out here the next couple weeks for some short-term trading. Maybe some fancy words you might have heard of it. Zero DTE, that's 0 days to expiration. There's huge volume in the markets right now for short-term option trading. So good stuff. Aussie Swiss. All right, Chris, we'll take a look. Here's CAD Swiss. I didn't mean to click on that one, but there it is. Aussie Swiss is at 6,000. What I'm looking for in Aussie Swiss is right here. Chart alarm is set at the high, chart alarm set at the low. If this is trying to put in a bit more of a low with some risk on trading, then breaking up here, hopefully we start to see some momentum to the upside, take out this level. This would be a fantastic bullish pattern. If we take out this high or challenge that high, I'd love to see a head and shoulders or a crown pattern that we can trade. That'd be pretty solid. So I don't think the bottom is safely in yet. In order to get a little bit more confident, I want to break this high. If Aussie Swiss breaks higher, CAD Swiss did break higher this week, but it stalled a little bit. Swiss yen is still kind of messy, but I'm looking for a downside break. Euro Swiss is still sitting at support at 97. We need to get above 99 or 1.00. Pound Swiss is holding those support levels. We're at 112. A lot of sideways chop there. New Zealand Swiss having a nice little run back to the highs. That's a good spot. Dollar Swiss has had a pretty good week. We're retreating slightly off this monthly pivot, but there's room. We haven't hit the daily EMA in a while. That is a bar count of around 135 bars. We just had some consolidation that broke to the upside. So just remaining patient on a lot of Forex positions. Profit wise, so our dollar yen is up. We got it around 136, 136.06. We're up about 260 pips or so. Hopefully we get up to this chart alarm at 139 to 139.50. We can protect about 250 to 300 pips on the dollar yen. Our Aussie dollar is retreating, but it's risk-free. I'm going to let it go. We had profits. Man, my 6,600 didn't hit. That's disappointing. And then my New Zealand dollar, same thing. Pulling back. I've got a break even at 10, plus 10. So I can't lose on Aussie dollar, New Zealand dollar, but I'm hoping we will stay range bound. If somehow I'm off and we get stopped out at plus 10, then whatever. But if it's range, I'm looking this to that's drawn horribly. But range resistance right here, I was looking to see if we go high, low, lower, high, lower, low. You know, so we wrap up this week's trading. We have a full week of trading next week, no interruptions. And then holiday on Monday for Memorial Day, shortened trading week, end of the month, debt ceiling, all this stuff coming together in the next week and a half. So there's a lot of drama. NQ, you get on that, Chris, for Aussie Swiss, looking to see if we break those highs. NQ, it's my NASDAQ futures. I mean, this was a pretty straightforward. I think last week when you asked me about this one, all I was talking about was, look, I'm really waiting for a breakout. And there you go. So if you were long futures this week, easy peasy, right? Pretty simple trade. It's a Friday. If you had a good week, especially the last 2 days, I don't know if I'd be forcing any trades on Friday. I think this could be some profit taking today. We could chew back into this candle a little bit. But I'd say overall, pretty straightforward breakout, nice clean 3-4 day move, and enjoy the weekend. But we're in open space. We're up above this previous high. This is back in August of last year. How much higher can we melt up? I looked at this yesterday, just taking a big Fibonacci from high to low. We drag this all the way over. Where are we at? We're trading right around that 50 to 55% retracement. So is that reversion to the mean? Sure. I mean, that could be our high to low. Market's found halfway. Are the bulls able to, stay with the momentum? Are the bears coming back into swing? If this is going to be a fighting point, I mean, this is what happens is the market found its equilibrium from the sell-off. Now we could see another chunk of indecision, right? So we had indecision here and then a push higher, indecision here, then a push higher. We could have some indecision here, and we could just, get it. It makes it tough because it finally feels like we have some direction. Right as we get into May, it's like, are we really going to have a volatile summer? I don't know. Part of me thinks that this whole thing with the debt ceiling has been priced in this week, and then whatever happens that first part of June is buy the rumor, sell the fact. So if that's the case, I wouldn't be surprised if the market sells off a little bit and we have some indecision, and all of a sudden we have a slow summer. So obviously anything can happen. I'll be watching price, but the neutral position I have, it's like we're benefiting from any movement. Anytime the market's giving us some decision, there's profits to be made. We're doing good, right? We're doing well with that. Fed Powell said, does speak today? Yeah, maybe. I mean, what's he doing? Is he on a panel today or something? Is he on the calendar? Yeah. Perspectives on monetary policy. That's a research conference. Okay, big whoop. Yeah, there might be some headlines out of Powell. I don't know. I mean, I'll tell you one thing. The Fed is not going to say anything about cutting rates. Every Fed speaker is going to, I mean, yesterday I saw breaking news was, they're talking about raising in June. If we go to the watch tool, the pause is very likely, right? This is still the high percentage pause, but this has been, this was like 80+% earlier in the week, and now it's 60%. So is the market anticipating or looking for some type of Fed hike? I don't know. I mean, and here's the thing. If they are, how is tech still the best supporting or the best rallying sector, right? How are these big tech companies still killing it if the Fed's going to keep raising or at least raise again? So we'll see how this changes. I think a pause is still fine. I mean, we have a lot of tightening credit conditions. We have lower liquidity, widening credit spreads. All these things are happening because of the bank situation in the U.S. So a pause is essentially the same. It's having the same effect on the market. Unemployment claims are still rising. And we have a low unemployment rate right now. Participation rate between, I think it's from 25 to 55 is back up to like pre-COVID levels. But your 55 plus, that demographic is not coming back to the workforce. So you're still getting, that average of like 62, 63% participation. Arguably a tight labor market, but people are coming back. And I think with elevated inflation and trying to just maintain a standard of living, people are coming back to the workforce. So pause. But this percentage is changing where it's been shifting downwards where there may be a talk of a rate hike for June. July, pause expected. September, now you're seeing the highest probability of no cut, right? November might be the first month that we cut. There's your 25 basis points that the market thinks that the Fed's going to cut. Usually the cycle is about 6 to 8 months out. So if we officially pause in May, we don't raise anything in June, then November would make sense for that 6 to 8 month window that we start putting in that first cut. But the Fed's going to try to get as much mileage out of a tight-lipped commentary for the rest of the year. They will easily say inflation's still bad, we need 2%, labor market's still tight, blah blah blah. They're going to say the same thing. So we'll see how the market takes it, how the market reacts to it. Maybe the market's thinking clearly ahead. It's a forward-thinking mechanism, and as always has been. So we're starting to move ahead of the debt ceiling. We're starting to move anticipating rate cuts later in the year, and that's where sometimes it doesn't make a lot of sense. You know, let's see here. Netflix, Coca-Cola, people watch. Yes, they do. Yeah, Netflix had a big day yesterday. So huge day yesterday. Break to the upside. This was another straddle trade that we had. So right in here. So if we're above 340, which we are, we make money. If we're below 320, which we are not, we lose, but we make a net 50 cents. So as long as we have direction, we're good. As long as price stays outside of this range, we make money here, we make money here. So we have a lot of those trades. Yep. But big pop on Netflix. Again, reversion to the mean. Take a look. If I just drag a Fibonacci from high to low, can we get back to 50%? Wouldn't surprise me if a lot of these big tech companies can do it. We're at the 382 right now. So we get all the way back here. That's 432. There's room, and there's your halfway point. Does that mean the bulls continue? I don't know. Probably not. I'd say this point, it's like that's a great rally to get back there. But this is where the bulls and bears are going to fight again. So if you are, I mean, we were long Netflix to start off this year. We made some good profits and good income over 3, 4, 5 months. This was a low back in like June of last year. But once we put in that official low in the indices in October, we've had 100+% upside on Netflix and Meta and several other stocks. So there is, 132% upside from those lows. Time the market a little bit. There you go. Okay, Coca-Cola, the old Buffett staple. Coca-Cola sitting at 62. This one's a good range trade. We come back down here to the lows. I would certainly like to scoop up some Coca-Cola back around $60. We come any lower than that, same thing. 60 and 55, decent dividends, lots of cash. Consumers are getting passed down. I mean, how many of you have checked the what are they called? When you go to the grocery store, it's just like those compulsive items, or the impulsive items rather. You're checking out, you're like, oh, I'll grab a soda. I mean, now they're like $2.25 or whatever for just one 20-ounce soda, right? I mean, what happened to $1.19, $1.25, $1.35? What, everybody notice how you have small, tiny minis now? I saw this yesterday. Cereal coming out with minis. So shrinkflation is a thing. And guess what? Consumers are still dumb enough to pay for it. So guess what? They're still padding their profit margins, passing every dollar of added expenses to the consumer. And that's why we're still somewhat stable out there. So, but yeah, I mean, I would follow Coca-Cola all day. Netflix is obviously a little bit more volatile, but having that 5 million subscribers, you literally have like 5% of your memberships. Like, yeah, we're gonna discount instead of paying $17, $18 a month now. Which, by the way, I think they discontinued the DVD thing officially. A friend of mine has had the DVD membership for I don't know, maybe close to 20 years, and they're discontinuing it now. But that was still like the $5 or $6 a month Netflix membership. You just get the DVDs mailed to your house. They still did that service. But if you wanted to go streaming and then you wanted 4K and then you wanted no ads, it's like they've gone sneakily from $10 a month to now like $17, $18 a month. But yeah, now they're starting to throw in like, we'll lower your cost, but you're going to have ads. I mean, I don't know. I'd rather just cancel Netflix and say, you guys don't have good enough content to watch right now. So anyway, all right, I'm going to go. Any other questions? It's 10 o'clock. Let's switch gears. I'll get into the trading room here for Equities on Demand. All in all, interesting stuff happening. Good week overall. Good profits in Forex. Good profits in stocks and options. We're being really choosy. We're being directionally neutral. It's good to see that the market's choosing a direction for us. And we have some nice profits rolling in this week. And the drama continues. So, like I said, have a good weekend. Next week, full week of trading. The 26th, I will be starting a little road trip back to the Midwest. I'll be gone that whole next week. There'll probably just be some video updates on the social media channels, Telegram and stuff like that for the trading rooms. But the 26th through the 4th. So trading wise, I mean 26th through the 2nd, I will be limited live sessions slash just video updates and messages. But anyway, next week, all the same business as usual. And then we get into, like I said, holiday shortened trading week, wrap up the month. Debt ceiling's coming to a head. And we'll see if they can hammer something out instead of having the 11th hour lift possibly into next week where it kind of pacifies the market a little bit. Okie dokie. If you do me a favor before you go, would you hit the thumbs up button for me? We had 35, 40 people watching before you bounce. Just hit that thumbs up button for me. Let's get the number of viewers and likes to match, help support the channel, all that good stuff. And we're creeping up towards 6,000. Steadily every kind of 30 days. 50 to 100 members coming in. So it's good that people are finding us, and hopefully we're going after organic growth. So that's been an interesting lesson trying to, stay up with the algorithm and whatnot. But I just do this to make sure I can reach as many people as possible, talk the markets, and if you need any help, let me know. And if you haven't checked out the channel and checked out the Trading 101 series, I would encourage it. There's like 15 or 20 videos, if not more, but some good lessons in there to take away. And of course, bring some questions in, and I can do more videos based on what you want. Okay. All right, stocks and option traders. I'll see you in the trading room here in just a minute. And happy trading, lots of profits. Happy Friday, and I'll see you next week. Thanks. Bye.